Doge holders, this is your last chance. This is huge. Cryptocurrencies have been suffering widespread losses in recent days. Bitcoin dropped to $42,527.50, which is its lowest since August 7th. Ethereum fell from $3,300 to $2,935, and Dogecoin also suffered some huge losses. But why did cryptocurrency suddenly crash? Well, one of the most important factors is believed to be the possible collapse of the Evergrande Group. Founded in 1996, Evergrande Real Estate currently owns more than 1,300 projects in more than 280 cities across China. But the broader Evergrande Group now encompasses far more than just real estate development. Its businesses range from wealth management, making electric cars, to food and drink manufacturing. It even owns one of the country's biggest football teams, Guangzhou FC. There have indeed been an enormous growth, but what suddenly triggered the crisis at Evergrande is the new rules brought by Chinese regulators. Last year, Beijing brought in new rules to control the amount owed by big real estate developers, and these new measures led Evergrande to offer its properties at major discounts to ensure that money was still coming in to keep the business afloat. However, China's real estate market began to deteriorate around this time, and now Evergrande is struggling under a $300 billion liabilities burden that has disseminated its credit rating and share price. It's faced with nearly $800 unfinished residential buildings, many unpaid suppliers, and over 1 million homebuyers who have partially paid for their properties. Now you might be thinking, why would it matter if Evergrande collapses? What difference does it really make? Well, there are two factors here. Firstly, many people bought the property from Evergrande even before building work began. They've paid deposits and could potentially lose that money if it goes bust. There are also other companies that do business with Evergrande. Firms including construction and design firms and material suppliers are at risk of incurring major losses, which could force them into bankruptcy. The second is the potential impact on China's financial system. China's extended property boom that started in the mid-1990s has now ensured that nearly 3/4 of the country's household wealth is locked up in housing. So a collapse at the biggest real estate company could have a really serious knock-on effect on the entire economy, dragging down growth and potentially setting off a cascading impact that could swallow down the global commodities and financial markets. In fact, we've already seen some of its impacts. The crypto market is volatile that even the slightest bump in the status quo can send the price of the biggest cryptocurrencies through the roof or down in the dumps. Analysts view the current sell-off as nothing but investors rushing to liquidate their crypto funds for fear of China's crisis. However, professional traders are using this volatility to book profits by buying the dip and selling during a recovery. And I'm pretty sure many of you are stockpiling Dogecoin right now. Dogecoin is currently in a consolidation phase, but its price history indicates that a breakout could be coming soon. That's because if you look at Dogecoin's daily chart, it shows that it often consolidates for extended periods before breaking out. These stagnation periods are characterized by the formation of descending triangles that result in an exponential price movements. For instance, Dogecoin developed this type of technical pattern for 26 days before surging by 936% in late January. Similar price action took place in early April after the asset had consolidated for 2 months. And now, Dogecoin appears to be developing the same bullish continuation pattern once again. Dogecoin's price has made a series of low highs since early May, while the 17-cent support level is preventing it from a steep correction. But if Dogecoin somehow slices through the descending triangle's hypotenuse at 26 cents, it could kickstart an exponential price movement towards new all-time highs. Well, with the price currently in such a steep decline, it's not a bad time to get started. In fact, we can already see that the buying pressure is accelerating. The number of large transactions on the network with a greater value than $100,000 can act as a proxy to institutional players in whales activity. A significant increase in large transactions could indicate that wealthy investors are beginning to position themselves for a new bull run. Now, why this matters is because currently 1,560 large transactions are being executed on the Dogecoin network. In fact, the number of large transactions hit a high of 2,520 on September 7, a 38% increase that could suggest the whales are starting to take control of the price action. And why would they not? This is the perfect time to buy. But how do you know that the crypto you see dipping is a bargain that will bounce back and not a knife that will cut you? Simple answer is, you don't. Unless you have particular experience in and insight into the market, chances are you're going to be guessing just like the rest of us. And in that case, I'd suggest that buying the dip might just as easily hurt you as help you. If so, what's a better way to invest? Well, consider dollar cost averaging with your investments. If you want to own $1,000 worth of Dogecoin, try buying $100 worth of Dogecoin every month for 10 months, or $100 per quarter for 2.5 years, or any other period that strikes your fancy. If it continues dipping, then not investing all your money at once will buy you larger and larger numbers of coins with each purchase. So if the purchase does turn around eventually, your profits will be all the greater. On the other hand, if the crypto turns around earlier than you had planned or hoped, you'll at least not have missed the boat entirely. And your later investments will be in a crypto that is growing steadily healthier and more popular over time, which is not at all a bad thing. You won't know which ways will play out beforehand, of course, but your chances of profiting will improve either way. Well, that brings us to the end of today's video. If you found our video informative, don't forget to hit the like button and share it with your friends. Until next time, stay tuned and subscribe to our channel for all new updates coming up.